Mate, we've got a real treat today because we've got Matt Wilcox with us. Now, Matt Wilcox, if the money miners haven't heard of him before, they should, because he's a tremendously backable dude, as you'll see from this conversation. His list of accomplishments is enormous, and I think you get a sense that he's the kind of guy that just gets stuff done.
100%. He knows what he's talking about. It just sort of reeks of competence, doesn't it? You know, the track record is there. It's why the shareholders who have backed him in at Robex, backed the deal with PDI have, and I'm excited to see what comes next. I'm excited to delve into the history. Tietto, he's been at WAF, Nordgold, built 6 mines in the last 14 years, I think he said there. So there's a heap to be learned from this one.
All those mines that he's built, JD, they're in Africa, West Africa, mostly. Actually, no, one in Russia. Anyway, Africa, why do I bring it up? Because you and I, mate, we're heading back to the great continent of Africa very soon.
We are indeed, mate. We're going to the great continent of Africa again. We've teed up a bunch of site visits. We're going to see some spectacular operations, some operations that are actually mentioned in this episode. We're very excited.
But, mate, there's a window that's free.
There is.
Small window, a couple of days.
We've got a couple of days free. We would love to go and see a few more operations in the Joburg area. So we're looking at you, Impala, Valterra, African Rainbow, Sibanye. Get in touch.
Goldfields.
Yep.
Mate, if we can visit some of those operations, if you, money miner, listening, can get us into one of those operations through the front door or the back door, we would be delighted.
We'd be very grateful.
Send us an email to gc@moneyofmine.com specifically if you reckon you can get us into any of the mines in the Joburg area there in literally
1 week,
like 10 days time.
Now to our conversation with Matt.
Matt Wilcox, welcome to Money of Mine.
Thanks very much. Thanks for having me.
We're delighted that you're here, mate, because between JD and I, we've got the collective experience of building 0 mines, but just having you in the room, collectively the 3 of us have built at least 7, I think. So
yeah, 7, maybe more, I guess, depending on how far back you go. But yeah.
It's a great track record, Matt. So we're keen to unpack that and get into some of the deal you've done, potential deals in future. But we've got to talk about a shareholder of yours. One of the first times we came across Robex and what you guys are doing, a shareholder of yours got in touch with us and said, I bet my house on Robex. I was like,
I know who that is.
Yeah.
It's one of my ex-employees, actually. He was an electrical engineer that used to work for me at Lefa. So I was GM there, and he was like an electrical superintendent. He's a pretty mad dude, pretty intense. But yeah, good.
For the record, he sent a screenshot. He had bet the equivalent of an Australian house on you, and it had at the time that he shared it with us, it was looking like it was coming good and still going strong.
I think we're in for the same amount of money, like cash wise. So like I bet a pretty big chunk on myself. I've made most of my salaries, or more than my salaries, in the last sort of 7 years, just investing in the mines I've been building and the projects companies I've been working for.
So as Trav kind of touched on there, I think 6 mines so far from like the top level that you and the guys have put together, and there's some beforehand with your engineering kind of days. But
yep.
What's the appeal with West Africa? And Russia, you can't get enough of it.
Oh, look, I think once you start, like you fall into one, you fall into a second one, and then you're all of a sudden sort of an African veteran, right? And then, then after 7 or so, that's all you know. Like, so it's to me, like it's the easiest place to build a mine, really. We've got our system set up. We know our contractors. We know like where we source our staff from. And things just move. You've got to be really diligent about your planning. You've got to make sure everything's ordered in a timely basis, because there's no last minute. You know what I mean? Like everything has to be on a ship or a plane. Like at one point or other, there's very little that's supplied locally. So you've got to be really diligent to make sure everything's on site, and then you can normally turn around, pretty much on time and on budget.
There's a completely different context to building an operation in Western Australia versus in West Africa, I'm sure. But there's geological gifts that come from the fact that there are much more readily available deposits to be mined for the first time, right?
I guess so. There's also, I guess, we don't have to suffer with the same labour shortages you do in Australia as well. They're really, like I say, to get 40 electricians on a site, you've got to steal them from somewhere else, right? They're working everywhere in Australia. Like no electricians out of work. So whereas in Africa, you've got a global pool and you've got a whole West African pool to draw from. So it just gives you a big boost. But, some of the deposits, how often do you get a Fekola or, even a Bankan, they're just fantastic, big, thick reefs of gold and pretty much untapped and unknown, and there's so many more out there yet to find. Like it's chronically under-drilled, the whole of West Africa, and, where everyone seems to invest money in the drill bit, you generally find something after a amount of time, especially at this gold price.
So you mentioned Bankan. I don't think we can wait too long before we start talking about the battle for Bankan.
Yeah, it was an interesting one, especially. Look, well, we sort of, it was on and off again. It went for 6 months before the market even heard about it. We were sort of talking about it. There was all this interest about it in the Lundins and Shijin coming in and going out. It was
Perseus putting their foot on Predictive much
Perseus,
earlier than that.
Well, I mean, to be brutally honest, we started doing due diligence over Robex when we were still with Tietto. This was going to be an acquisition asset to defeat the Chinese bid, which was hostile, and to get there. And so we looked at it for months. We'd been through it. We'd been aside, actually. And then on the way back home on the flight, and this actually happened, like the Chinese, we started the flight, the Chinese held 7%. At the end of the flight, they held 45. That they all the Chinese shareholders got the call that they had to sell into the bid. And we were like, well, like we started a WhatsApp group, as you do, and we were like, this is the plan, and let's just pitch the board that we take over the company. And it was like, there was a few brokers on the call that were like pretty disappointed they weren't getting a fee, like it was, it wasn't going on. Then eventually they warmed around to it, and I sort of pitched the board maybe a week later. I said, look, this isn't going to work as an acquisition, but look, I can come in, recapitalise it, and build your mine. But to do that, I'm probably going to have to get rid of most of the board and reset the board and bring in a new management team. And I think they took 2 days to think about it and came back to me, yep, absolutely, we'll do that. And I left Tietto on a Friday afternoon, started a roadshow on a Saturday, and went through North America, Europe. And back in Oz, it was 2 weeks of just frenetic activities and meetings, and then we recapitalised it with about 120 million CAD, and then we moved forward to do an IPO in Australia, and the rest is history. That's only barely it's not even 20 months ago now, so it's
pretty recent. It wasn't all that long ago. Tietto was a company trading on ASX.
And like in that time we've IPO'd, we've done a merger, we built a mine. It's been a pretty busy.
It's been active.
It's
been active. I want to go back to a few of those points you talked about, but we'll start with the recent acquisition of Predictive, which effectively lets you consolidate Bankan where there are synergies. It was a pretty fierce tussle in the end between Perseus and yourselves, and
it was at the end, I guess, and that's what it came down to was our shareholders of Predictive wanted us more than the Perseus stock, I guess. So that was and that kind of happened late on a Sunday night. And I used the word crazy Italian hedge fund managers in an interview with The Australian, which got quoted. I probably shouldn't have done that. Now I've just said it live, but those guys are pretty cool and they'll understand. But they and they sort of called me late on the Sunday afternoon. To me, it was we're like we lost this now. But they weren't even shareholders of Robex, and they sort of said, we really want to support you to make this deal. And they're like, this is the numbers you have to move to. And I'm like, I can't move to those numbers. And he's like, well, can you move a little bit? I'm like, probably move a little bit. I'll have to talk to our biggest shareholders. I'll have to get this signed off, and then I'll have to obviously go to my board. And that was, I think, 3:00 in the afternoon on Sunday. And by maybe 9 that night, we had a board resolution. We pitched it again, and that was accepted by all the shareholders. And I think I had about 45% of their shareholders agree to it. And I'd say only half of those shareholders were Robex shareholders, so it was good. To me, it was a good testament to I guess the experience of my team and stuff that they wanted us to build it. So
it was a pretty unique confluence of circumstances all around that deal. I mean, the the whole way it was structured, there was no vote of Predictive shareholders. There was only
right.
it was only a Robex vote, and yeah, regardless, like you said, from the actual kind of shareholder polling, there was still an enormous desire from the Predictive like board and shareholders to push ahead with a deal that was effectively a lower value but a combination with Robex as opposed to a higher value with Perseus because there was like the synergies.
It depends
were
how
real.
you
Right.
assign value, right? Like at the time, the share market value. If you look at what happened in the market 2 weeks after that, I guess the market revalued the deal at a higher rate. So,
Yeah.
so it's look, I think as a combined company, we're going to have 2 long life assets that are in their infancy, starting up in the halcyon days, and the shareholders saw more value in that than going to a company that's probably some of its best days are behind it in terms of its assets, and I'm sure they'll get more. Like I don't want to say anything bad about them, but like it's having 2 long life assets in a hub that's sort of 400,000 plus ounces and 10 million resource ounces, like is something that's valued, I guess, and they also see it as it's a potential acquisition from a tier 1 miner later on. That's the kind of asset a lot of miners will say that's the only thing we're interested in, like 350,000 plus ounces plus 10 years mine life over this period, and that's essentially what we'll have in Guinea by the end of this. So.
Interesting. You made the comparison before. You get these ore bodies like a Bankan or like a Fekola. I remember the first time Predictive came on our radar, JD, we were both working at Argonaut, and there was a broker banging the table on Predictive pretty hard, and he was like just buying as much as he could. And he was like, "This is the best thing I've seen since Papillon." The only thing that's yet to come out is Met. He was so convinced that this was one of those pretty rare ore bodies that comes along.
It's certainly some big dick intersections, and it's like just the geometry of the ore body is beautiful as well. It sits on that sort of geotech angle, so you can mine it. Half the pit will be waste, half the pit will be ore, and it's a miner's dream, like you'll be blasting all ore blasts or waste blasts. There'll be almost no dilution across it. It's big, it's thick, and then the underground is relatively simple as well once you get down to it. So, we're still re-optimising how we're probably going to actually execute that, I guess, both from a construction point of view and a mining point of view. But the pit may get slightly bigger and the underground may come in later, but it's a fantastic ore body. Nobody knows the end of it. There's still a lot more to find on the permit, and there's still a lot more to find at Conero. So I pretty much bet everything I had that both those mines will be running in 20 years from now, and both producing good amounts of gold. So
maybe we should have seen it coming at your ADU talk you gave, I think in September of last year, Matt. You said, got to keep the team busy, and Conero was just about done. And less than a month later, I want to say you came out with the deal. It
was actually going to be that morning, but it's sort of negotiations fell apart at the very last minute. So it was due to be announced, and we'd come all the way. So it was and then it sort of it died down a bit, and then it came back on just after Beaver Creek in Denver. So we put it back together. And we really weren't expecting a Perseus bid until they actually bid, I guess. I was, Jeff had been very public that it was overpriced. It was, and, I think if Jeff was there, they wouldn't have bid. Yeah. So it was, but, it was a new management team at Perseus. We saw what we saw. So it was good to come through one with a win after, I guess, losing Tietto to the Chinese, in a very hostile action that we actually came out sort of trumps in a M&A contest, I guess.
Trav, I've got a quick one for you. Have you heard of Metals Hub yet?
Go on.
It is essentially the digital layer for the entire raw materials trade. So we're talking about metals, minerals, ores, the whole lot.
I have, in fact, heard of Metals Hub, JD. You know why?
Tell me.
Because they're massive.
They are.
I think of it like this marketplace with two-way traffic. You've got the miners on there, like Liontown, Anglo. They're running these competitive sales to improve netback and margins, sort of selling the raw materials. And then on the other side, you've got the buyers on there, the Auto Compass, the RHI Mags of the world, running these structured tenders to get their costs down using this platform.
And Metals Hub has the scale already. We're talking about a platform with 3,000 buyers, 380 different material categories, over 7,000 transactions a year at the minute. It's not just some early stage idea right now.
That's actually real liquidity, JD.
Exactly.
I think I'm going to upgrade how I'm currently selling and procuring metals because I'm doing it via email and 50 BCC chains. So I'm going to upgrade now, JD.
Very, very dated, mate. Get on board. Check out the platform at metalshub.com/money of mine.
I'm going to go buy some metals now. Tell me about that time at Tietto. I mean, you were convinced this was a vehicle that you were going to, like, that would have been equivalent of what Robex is today. This is the vehicle you're going to grow a company with multi-mine assets. And
yeah, look, that was the plan, but the best laid plans, all that. It was difficult. The resource model really didn't hold up, I guess. And, at the gold price back then, it made money, I guess. We never raised capital after startup. We paid off debt, and we were sort of starting to make 10 million plus free cash a month. Just when things had turned around, the Chinese launched that offer on us. And it was, it came in, I was in Côte d'Ivoire, right about to leave to site on a Sunday morning, and they rang me from Morgan Stanley and said, yeah, we're going to launch a bid on you. And I'm like, well, hang on, why you waited till Sunday? Like, couldn't you have done this Friday afternoon? And they're like, yeah, we kind of were going to do that, but we didn't do it in the end. And I'm like, right. So, yeah, rang the board. It was hostile, and it was like they were almost timing my movements around West Africa, because when they put their second bid in, I was in the jungle in Liberia somewhere looking at one of our other assets out there. So it was like, really, and then like just people calling me the whole way back, and they just didn't believe I couldn't get a decent phone reception. I'm like, mate, you don't realise where I am. Like this is Liberia, like people just think I was flogging them off. I'm like, for the next day, I'm completely out of reception. But it was they won it in the end, but it was kind of bittersweet, because I think in the end we at least we got the higher bid for it. We got it together, and we had somewhere to go and somewhere to keep the team busy on the next one. But it was would have made a lot more money at this gold price. It would have been a pretty decent asset. Never say never on selling to the Chinese, but it wasn't a great first experience.
What did you learn about knowing the ore body before you turn the middle on? And I know that
I
you've
learned
come
a
in
lot about trusting resource geologists, I guess, and knowing who your resource geologists are. And I've got a very, very trusted guy that goes over my resources now. A guy, I don't know, you might know him from Macquarie days. Ted Coupland?
No.
Ted. Anyway, he's kind of, I'm not going to say he's elderly, but he's certainly he's a bit older. But he's one of the best resource geostatisticians I've ever worked with.
Did he used to do?
He used to do all Macquarie's resource review work.
Except for Tribeca as well.
Yeah. Tribeca as well, and he still sort of consults to them. I think he's got a Tribeca email, and he's works for himself. I think he founded Cube Consulting as well originally. So it was oh
wow,
he's a resource geologist, and he can do them in it's not just straight MIK. He'll do them in non-linear ways and take the resource together apart, put it back together, and tell you what he thinks it's going to be, like what the upside and the downside risk is. And he's sort of someone that will be reviewing the rest of my resources as long as I'm in.
So the 5 mines up until Abuja, Tietto's Abuja, plus, but there was like great reconciliation between the resource and reality, and then Abuja was the exception. What were the actual kind of like?
Well, I guess it's those narrow strand, high nuggety sort of veins of that, depending on how you draw them up, and if it's ordinary kriging, you're essentially just drawing. You're drawing your wireframes, right? So it's a geologist's interpretation of what he thinks the ore body will look like. We didn't do enough infill drilling, and we certainly hadn't tested any grade control patterns. And what we found is when we started putting real grade control drilling in there, the resource just wasn't there. Like, it hadn't been grade capped anywhere, and the high grade zones just didn't line up. And we still ran it really efficiently, and we built it really well. So it was going over nameplate and making decent money, but it's it certainly didn't reconcile as planned. So you live and learn, I guess. It's certainly one of the things. A lot of people sort of pointed out the faults with that ore body from the start. You know, I was like, oh, it's all right. You know, you can get around anything, but you really can't. You know, your ore body is it's the most important part of starting any resource project. You know, and it's making sure that model is done correctly, and it's and you know, then testing that with closer drilling right down to a grade control pattern until you're absolutely confident that stacks up. And we've done that exhaustively at Robex. You know, we drilled, I think in total we drilled almost 8 million tonnes of grade, like 4 million of that still on a permit we can't access yet. But it's you know, and it all held pretty much. It reconciled a little bit over the model in all cases, which is pretty much where you want it. You know, I mean, it's having those resource geologists and having the trust in the resource geologists makes a big difference.
The other key lesson that I see from the outside that you've learned is the register. So you mentioned that point of the Chinese got the call, and all of a sudden they go from whatever percent to nearly half acceptance, and it was a matter of time before they got over.
Well, it's not even 50, but by 45 they control the vote in a shareholder meeting.
Yeah,
you're never going to get 90% vote. So it's
sure. But this time around, with a fresh vehicle, in a sense, you've done the capital raise and everything with Robex. Coming into this transaction, you've got the French family that's there, the other group where you've vended in the asset from. You've got
Christian.
Yeah.
Christian.
You've got
a few very supportive high net worth guys, I guess. You know, especially out of Sydney, but a rockstar register of funds out of the US and the UK and
tightly held
Europe. So it's sometimes too tightly held, I guess. We don't have the liquidity that a lot of people ask for, but I'm like, well, what can I do if no one's selling shares? Like it's just the way it is. But it's we'll get that liquidity, I think, when it comes around to Predictive. So, you know, it's got enough trading volumes for the both of us. I think so it'll come on. But yeah, from, you know, our major supporters, BlackRock, you know, everyone that's sort of been there from the start haven't sold a share. So, and I think they'll all be really happy with our quarter one results as well. You know, it's been a stellar startup. Put out a fair bit of this already, but yeah,
Commercial production.
We're over nameplate. We're at commercial production already. We've announced it, so it was.
Saw the photo of just gold bars in your hands everywhere.
Yeah, there's much bigger ones than that.
It was a lot more than one, which you normally see.
Did you get tired of that 6 times round?
Oh, I don't know. Like the first gold pour day is always a bit magical. You know, everyone stops, and it's This one was really tight to get the first bar out because I wanted to go home for Christmas. Like, you guys are pouring on the 21st of December. I don't care what comes out, and I think we got about a couple of kilos out of it. It wasn't stellar, but we still by the end of the year I think we'd poured 1,000 ounces or so, and then that next shot I was like, let's just do that pour, and it's been flowing pretty steadily ever since.
Yeah, so this is a phenomenon I really want to tease out, and because you said first gold pour was 21st of December, and you're already at or above nameplate, and it's a very small window. So you've got this wonderful term called an oxide holiday, which I just want to understand that term, what it means, what your observations are.
Well, look, any miner will tell you this. I mean, mining saprolite is easy. You know, it's more or less free dig. We might have to shake the ground a bit just to get a bit of excavator efficiency, but it's super low powder factor. It doesn't wear your machinery. It doesn't wear your GET, your bucket teeth. Your loaders. Everything lasts for a long time. When it goes through your crushers, it doesn't wear chutes, doesn't wear liners, it doesn't pierce belts. Everything's easy in saprolite. And it sort of on the wet end, it's probably less so because it doesn't settle as well in your tailings dam. But it's still makes it really, really easy to mine, and you've got no power limitations through your mill either, so you can just absolutely smash tons. So it's
recoveries are great as well.
Yeah, it's oxide, right? So there is no refractory in oxide. It's all pretty much recoverable, and it's weathered down to sort of 80 meters. It makes everything a lot easy. Especially with an ore body like ours, which is big and wide and open. Everything's mineralized. You know what I mean? Sort of across the whole thing. So there are no zeros in our drill holes. There's 0.01s and there's really low things, but everything's got a little bit of grade in it, right? So it's it makes it really easy to mine this, because if you can put a whole lot of tons through, you don't have to be so fussy about your grade either, and you can be making a lot of money. There's low power restrictions, low diesel because it's super low strip, and I think Regis probably exploited it best, I guess, when they started doing their mining, and they did a lot of low strip oxide, and I think Barney's a similar sort of thing, and you get a lot of. It makes it a lot easier. When you start putting fresh in there, you wear out bucket teeth. Things wear, tyres burst, tyres get hurt. Everything in your pit is a little bit harder. So it's and everything in your process plant, at least up into the mill, is a bit harder as well. So
Regis is an interesting example. I think I can't remember where, that Duketon was like 30 odd different pits. Like, don't think of Duketon as, like a big operation. It was, like exactly what you're talking about.
Yeah, they're looking for good saprolite pits. But it's certainly, I think the best startups have all been in saprolite. It's hard to start up beautifully on hard rock and get, way over tonnage straight away. Like saprolite makes it easy, and it's all weathered. It's already oxidized for you. You don't have to leach it. Everything's easy.
That easy dynamic probably underwrites like when you think of the deal with Predictive, one of the counter arguments was, well, is there going to be a funding gap? Is there going to be some unfunded amount to bring on Bankan that is not disclosed? And to that, your argument is, well, the oxide holiday papers over all cracks. There's no no funding gap here.
I think people will relax on any kind of funding cap once we put this quarterly out. So there's just no way we see any kind of really requirement for extra funding just for the project itself for Bankan. If gold prices, and everyone's like, gold's gone to 4,500, and what are we going to do? Panic? But it's still ridiculous margins for us. It's 2,500 an ounce or so. Like it's huge. So when you're at that kind of margin, you print cash pretty quickly, I guess, and we're pretty disciplined about where we spend money and how we develop. And I think there's been rumours that the predictive CapEx number wasn't big enough, but I've done that numbers myself, and we've been through it in detail, and we're very confident we can do it at or below that number. So it's who's got more experience building a mine next to it in Guinea? Like it's not many others, So it's we literally just finished a mine 25 k's away. All our contractor rates are current. All our transport rates, we know exactly what everything costs. So
how do you think about debt, having debt on the balance sheet? I mean, you built so many of these from that managerial type role, but now you're leading the company.
I guess it depends who your debt's with, and we've had a very supportive. I'm not just saying this. We've had a very supportive team with Sprott, and I think you'll find the same is said from the Emerald guys and from the WAF guys as well. They've been great through the process. They understand it doesn't come without hiccups, but I think they've been impressed with how we've executed so far, and they're happy to stay on and try and be our partners going forward. Not to say they don't take their pound of flesh, they do, but it's
project finance in Africa.
It's still going to be But it's they've been pretty good. So banks, there's a conception that they don't move very fast in Africa, and it's kind of true. By the time Sprott had finished DD before banks even started looking at it, it's kind of very slow process. I guess that it's a slow lumbering beast, but I think we've got a pretty good debt lender in Africa. What we do in terms of getting another liquidity position or something like that to maybe look for M&A or something like that, we'll certainly explore those potentials. But for the project, I think we're very well funded. So
before we get to M&A, I want to dive back in time a bit and understand your Nordgold days in particular, Matt, because working for Nordgold, Russian miner.
It's a private company essentially, so it's owned by Alexei Mornishov, who's depending on what time of year it is, he could be pretty much one of the richest oligarchs or in the top 10. So it's he's only 8 years older than me, so he's still in his mid-50s now. So he had $1 billion at 35. It was pretty amazing. That's, I guess, the difference is. All the funding comes from one. You've got one shareholder to go to, one approval set. It's very simple, in that respect. Whereas, dealing with capital markets it's got its own little challenges, but and with debt funders, obviously. But it's It was a great time at Nordgold. I guess it was a whole bunch of Russians trying to learn how to be miners and really smart guys, but not particularly miners, and a bunch of younger guys that got their shot. I mean, they made me a GM and a project director on Bissa. I was 34 years old, I think, and I got given the dual role, and it was just really a blur of how we got through it all. But Bissa was a fantastic, same thing, saprolite holiday, sort of 4 years of all saprolite, and it was 2 gram a tonne sort of oxide for, you forget how good ore bodies used to be, but you're making 300,000 ounces a year at about $300 an ounce cash cost at the start, so it was fantastic. And then from Bissa to spend a year at Lefa just as straight operations in GM, they had the Ebola crisis through there. That was just so much fun. Got back to Bankan just in time for a popular uprising and a couple of military coups. But all this time we never really skipped a beat. We kept making gold. We kept advancing construction. Nothing really stopped us. And then at the end of where I was looking to leave Nordgold and move, and they said, come help us on this little Russian project for a couple of weeks. Turned into 2 years, and it was one of the hardest things I ever did. Certainly building a mine in southern Siberia, but and at the end of it, I was very glad to see the back of it. But apparently, it's making a ridiculous amount of gold now, making a whole lot of money. So it's a great project for them.
That's a heap leach operation as well, isn't it?
It's 12 million tonne per annum heap leach. Yeah, it's an amazing ore body. It's sort of because of like the cold and the thaw. I think it fractures, so it puts like micro fractures through the rock. So it's really amenable to heap leach to get really and it's just, you trickle a bit of cyanide on top and you just take the gold out the bottom. It's so easy and so big. And I believe they made 450,000 ounces there last year. So it was amazing sort of, not that they really publish much anymore, but it's an amazing ore body, and it's just made of money every year since we finished building it. So
if I tease out, like, if I just think from like an operational lens, like, what do you take away from those like 4 development scenarios? Like, what are you kind of, the big kind of fundamental philosophy or lessons that you have that you carry through with you just from a development perspective?
Especially in terms of developing, I mean, knowing your scope, knowing your budget, knowing your project execution strategy, and and then executing to those things is very important. And like, we've refined our sort of execution strategy a lot over the years, so we know exactly how we're going to approach a mine. But we also keep an open mind. If something's a better idea in one scenario or another, we'll flick back to it. But we execute our own earthworks. So we don't use contractors for that. We have a very good set of contractors we work with on civils for concrete and whatnot, and then structural mechanical piping. We've got about 2 contractors we go through in West Africa, and then we generally self-perform our own electrical with mostly Filipinos. So it's and a couple of ECG guys as supervisors, and we've been implementing that strategy pretty much for the last 3 jobs, and it's been really, really well done. We don't really rely heavily on EPCMs and stuff like that. We contract out engineering, but most of the procurement and construction management we try and do ourselves. And it's getting a good tailings dam design is always important too. And we Capo UK we've worked with really well. We enjoy those guys, but it's so we've been working on this for a long time now, and we I think we're about as good at it as anybody else, especially in the West African sphere. So,
do you get treated differently wearing a Russian hat versus the Aussie one?
In terms of like on site, or
just operating in West Africa, getting stuff done, getting stuff ordered, getting permits, these sorts of things.
Oh, look, Russia was the longest supply chain than I could have ever imagined. Going in there, I was expecting things to be quick and easy. It was much harder, like, than I could ever have imagined. Like just getting things on their railway, they needed to know every single component had to be broken down to its base parts, and then we're talking if it's screws that big, that's how big. You needed to describe that screw, like the thread count, the everything about it. So it was Russia was difficult in many ways. It's almost traumatic to think about it. So try and block out a lot of it. And I definitely very unlikely to be heading back there anytime soon. So probably one of the last Western people to build a mine in West Africa in Russia for a long time. So, but yeah, West Africa's it's good. I mean, you've always got sovereign risks, I guess, but you have that anywhere. You have political risks and you have some instability, but mostly you've got a lot of people, a lot of very bright people, you know, that want jobs, that want to work, that want to like see development in their country, and it's fantastic to bring that. You've got a local community you bring along for the ride with you. You develop them as you know, and they, you know, you see, you know, you become their kind of default government. You're quasi like government in the region, and you always help them build up as well. I mean, you obviously can't give everyone in the region jobs. There's 30, 40,000 people, but you can certainly try and create industry and bring as much there as you possibly can. So whereas Russia, you're in the middle of a snowfield, you know, in 300 kilometres, there's no one around you. So it's very, very empty. Probably, you know, it's sort of like mining in WA, except with the desert rather than the snow. So
yeah, the kind of lack of EPCM sort of, you know, you're effectively doing a whole bunch of stuff in house that a lot of miners just don't do.
Yeah.
What do you think is like the percentage impact on development capex from that decision?
Oh, look, it really depends on the strategy that people employ. I guess I'd say you're probably saving about 20 to 25% on average, and I guess you being the one that runs it as well, you're also a little bit more conscious of making the best decisions for you. I mean, like it or not, people that, you know, make decisions, they generally make decisions in their own best interest, right? So if you're trusting these decisions to an engineering house, they're probably going to make decisions that make it best for them. Sometimes that aligns with you, sometimes it doesn't, right? But, you know, if the decision is really what you think is going to be made, you're going to make the best decisions. And we've just got really good at it over the years, I guess. And we all come from an EPCM background, I guess. So, you know, I was with Lycopodium, then with Mimproc after that. So it was, you know, we had that experience anyway. And we've, I think we're about as good at it now as people can get before they burn out.
You've mentioned people like the guys at Emerald and whatnot, but are there other companies out there where you think they've got a wicked playbook, have learnt from them, or just more experienced people?
Yeah, certainly Morgan and Mick at Emerald have been fantastic. You know, they've done really excellent. I mean, they developed a mine in the height of COVID, you know, in Cambodia of all places, and they did it pretty much on time, on budget, with no screw-ups whatsoever. So I'm, big fan of them. G Mining, there's been a lot of comparisons about it. Like, I don't really know the guys, but I've heard they're pretty good at what they're doing. That sort of... Well, that's a comparison drawn by investors. They keep asking me about it. I'm like, I don't really know that side of the world, but yeah, it's.
So G Mining Services was like their bread and butter was developing mines, and now they're applying that as vertical integrated. It's really cool to watch.
The dream for so many services companies. We can get a mine for ourselves.
Oh, no. Is it? I don't know. Like it. Because there's risk involved, right?
So
and a lot of them are very risk adverse, right? Especially on an EPCM model. EPC, you very much you're taking on the risk, whereas an EPCM, like, you know, it's all care, no responsibility sort of thing. So they're, you know, and they're generally charging you an hourly rate. So it's you've got to manage them accordingly, I guess. Like,
if I think of the growth African gold miners that have come before. Robex. I mean, there's many of them have become much bigger miners than what Robex is today. But as at this point in time, you know, you think of like the likes of Endeavour or like B2 or
look, and B2 have been fantastic. You know, I think Dennis Stansbury and his sort of development team there. Then like an Endeavour, I think it's Jeremy and Petter. I guess those guys working together building, and we sort of, like myself, Jeremy and Petter, like had a little system where we were like using the same crews and like making sure everyone stayed employed between all our jobs, you know. So we worked together pretty well over the years when Endeavour were building mines sort of that way. They've got a bit fat as late. Like it's certainly some higher capital intensity builds they're doing lately. It's not I really can't understand some of their numbers. Like they're certainly off the charts, especially compared to what other people are building them for. But they're I guess that just happens as you become a bigger company. Well, that's what people say happens, right? So it's hopefully it doesn't happen to us, but it's.
But the company that jumps out to me is First Quantum as well, where so many people would talk about, and copper in slightly different parts of Africa.
They've been amazing, and they do basically everything themselves. Yeah, except for engineering, they really take on the whole lot, and they don't use contractors. They self-perform everything. So it's
Philip was an engineer.
And projects of like scales I can't even imagine. Like first quantum.
Tanshi and Sentinel. And
The one in
Cobre Panama?
Panama, yeah.
Huge.
It's amazing, yeah. It's amazing what they did. Even Sentinel, for a company that size to take on a project like that, just nail it and did really well. So it's a pretty amazing story, I guess. It's very unlucky in Panama, but it's I still think they've probably got a way to go yet.
I evaluate the landscape of gold producers in West Africa now. It's a very different period of time right now to what kind of has been. I don't know. Even just take a snapshot 5 years ago. Like the larger companies are ex-growth, or they've changed. They're different. The Chinese have a completely different appetite. The ability for Russian capital to be as forthcoming is completely different as well. Just as a lay of the land of the gold producing space in West Africa as a Western producer, how do you interpret that state of affairs?
Well, the Chinese have never been great developers in Africa, and they really haven't done a fantastic development as of yet. They've so I'm not really worried from a development point of view, but they do have an amazing amount of cash to splash around on buying developed assets. And
they're wonderful at developing the infrastructure, though.
Yeah, look, building roads, rails, ports, bridges, they're second to none, I think. And, you've seen that from the growth of China. What they've done inside Guinea, 840-something bridges in the 2.5 years previous to this. So it's an amazing amount of infrastructure, right? Obviously 800-odd kilometres of rail line. And the Chinese did almost all of that work. I'm not sure Rio touched any of it. So I think they stayed back as far as they could, to be honest. But it was, they've got an ability to develop infrastructure, but I guess process plant building is a little bit more of a niche art, and they haven't really mastered that yet, especially doing it in Africa where you've got a lot of things. You've got to manage that supply chain a lot better than what you would do in China, right? In China, I imagine anything you need is maybe 5 days away. West Africa, it's probably minimum 5 weeks, so you have to have your things, everything lined up, So it's especially with the shipping, at the moment, with Suez closed, with Hormuz closed, shipping's become a lot more challenging in Africa, but it's got some good partners we work with there as well on the logistics front, and we've been getting it done.
So on that point, everyone's talking about fuel right now here in Australia. What's the situation like in West Africa?
Yeah, well, we'll probably see a price increase this week. I mean, it's inevitable. It still hasn't. They're kind of the state buys of the fuel and controls the price. So we haven't seen that yet, but we will see it, I guess, because fuel's gone up and they can't wear that forever. So it's but they also, it's a countrywide price, I guess. So if they shock the market too much and put it up too much, like our governments let happen, they're going to shock their whole economy. So they're really trying to, I think, ease us into it. So, we're going to see more prices. We certainly don't have a supply issue at the moment. I think it depends on where the oil you use actually comes from, because sort of a lot of the oil it comes from sort of West Africa, Nigeria and stuff like that, then goes up to Europe for refining, then comes back down. So, our HFO, which is what we run our power station on, and our diesel hasn't been impacted at all. We've got 30 plus days on site, both. So we're in a good position. But saying that, you never know what happens if this thing escalates. Never say never in terms of a fuel shortage. I don't know how long this goes on for. If the world actually does, run out of fuel in some places, you generally think the supply and demand elasticity will come into play and people will use less fuel because it's more expensive. But yeah, it's always one battle after another. We get through a pandemic and then we have a war, but it's we'll get through it. The world always adjusts, I think, and hopefully this doesn't escalate any further. Hopefully we don't see any more countries. Yemen's just joined, obviously, so hopefully we don't see that going to other countries in the region. We just keep it contained and it fizzles out. Trump gets bored, hopefully, so we'll, because a lot of the world's petrochemicals and stuff like that also come from that region, right? So you've got to be very careful there as well.
Fingers crossed. How has your thinking about hedging changed over your career and what's it kind of at right now?
Well, I think, people buy gold companies for exposure to gold volatility, right? It's not something I'm really. You never say never again, but I'm not really inclined to ever take a hedge because literally people buy us for that exposure, right? It's they want a hedged company, but it's.
You manage your costs to be resilient through the cycle.
Yeah, you just got to make sure you're always running lean and making the most of your thing. I mean, I can't think of an experience in recent memory where a hedge has actually made a company money rather than lost it money. You know, it's can you think of one?
You got to go back in time for
It's
gold
hard
price to
when the
go
gold
down.
price goes up.
Yeah, you've got to go back a long way, but
Yeah.
I think Simon Jackson, who's the current chairman of Predictive and will be one of the directors, he told me a story that he locked in his gold at 340. He said gold will never be this high again, and he was right. Like it would never be this price again. He says I was right. It was never that price again. It was just always up. So that was all back at Sharano days with Redback. So it's like yeah. I mean you can see some horrific hedge books come out. I guess people that design hedge books are very good at making money off them. I can't think of one that's lost money in recent years. So it's I'd be disinclined to hedge. There's always puts and stuff like that if you're really worried about it. But in my mind, it's just run efficiently, do what you can, sell gold for what you get for it, and just continue to try and be a good operator out there in the lowest 10 to 25% of your cost curve, and you'll always be operating in the when things are terrible everywhere else, I guess.
What is the current state of the Chinese appetite in West Africa? Did I see Xi Jinping the other day buy a Chifeng?
I don't know. They sort of Xi Jinping own 25% of Shaojin as well, so they're all kind of interrelated as well.
Yeah,
it's hard.
You're right. Yeah.
You've just seen Allied go, which is
yeah.
obviously Mali, Sabodala there, and then that development up in Ethiopia. Those two small ones, Bonaco and Agbao in Cote d'Ivoire. Like you've seen that go, and for reasonable amounts of cash as well. And then you've seen their value on the Hong Kong Stock Exchanges rises. It values the asset 3 times what they paid for it. So it's all they have to do is buy assets and they can get 300% return straight away on the stock market. So it's, if that Hong Kong Stock Exchange continues to value assets the way they do, they're going to have a lot of money to throw at assets, aren't they? So it's and if they're the biggest bidder, especially when they have those kind of margins, you can resist it. But
if there's a sale process and someone's just selling for cash at the highest bidder, you can't compete with that, right?
Yeah, well, I mean, it doesn't always have to be a process for them to bid either, as I've learned. But yeah, I think it's going to be. I mean, you saw Chim go for $1 billion, which I thought was kind of amazing at the time for the valuation, but maybe they knew something I didn't know with the gold price, and it's probably worth that easily now. So, but it also their listing that IPO they had on the Hong Kong just valued them at 10 times cash flow, which is it's a lot more than any other gold miner in the world's been valued at. So
yeah. Like, what does it mean for the incumbents that are? Yeah, I suppose maybe maybe it depends if you're ex-growth versus got growth ahead of you. But if you're ex-growth, it's a very difficult proposition to warrant your.
Well, we haven't seen any of the tier one like the Barracks, the Newmonts, the Anglo Agnico Eagles, and all the big sort of companies selling out to them yet. Not in meaningful assets anyway. So I was surprised Lulu didn't go, and we'll see what happens when Barrick sort of does it split, I guess, see if that ends up in Chinese hands or where it goes. I don't know what their full strategy is with it yet, but there's a very good possibility that could end up in Chinese hands, I guess, that suite of assets. But, I still think Westerners are better miners than the Chinese at the moment, especially in Africa, maybe not inside China, but so we've got that advantage and we're probably better developers. So that's, also retain that advantage. But, I mean, you look at, say, Nimdini, Cardinal, it's only had 1 full year of production now. I think they bought it, 7-8 years ago? It was a long time ago.
2020?
No, it was, I think 18. It's before it was closed, or 19 maybe.
We'd have to check.
20.
Yeah.
I reckon it was
It was
20.
before we poured gold at WAF. It was during the build there. So yeah, I don't know, maybe.
It took a while to play out with that many bids.
Yeah. But yeah, look, it was. I think the Russians were just looking for accretion on their share value.
Yeah.
After a while, they were just matching the price. And I know the guys involved, they weren't serious about the asset by that price. But it was they did pretty well to drive up their own share value. But yeah, look, I'm surprised the Chinese participated all the way past the dollar. But it was what it was, and that was only made 200,000 ounces last year. And that was their first full year of operation. It was like, didn't you build? And they're like, no, we built 11 million tonnes per annum. I'm like, well, what's happened to it? Like, well, where did all the grade go? If that's the size of it, you should be making more than 200,000 tonnes. But they did get their ass kicked building it. Like, it was difficult for them. If you've seen that company now, it's got that old Osino Twin Hills thing, and they've employed Lycopodium to build it for them. So they've actually said Western companies can do it better than we can. So it's
didn't know that. I would have thought. Yeah, I did not know that at all.
No.
The like from memory, that's a Cardinal Gambini's refractory project, is it not? Or
yeah,
yes.
Look, although the management at the time went to great lengths to never use the R word. It's the second R word. It was, it certainly had a refractory component to it, and it needed a float and regrind. So it was, some of their met was somewhat dubious. It was kind of comical at the time. They put out we're going to have this study out by this date early, and then a week later they're like, no, it's going to be 3 months late. We're going to go back to the original dates now, when they didn't get the met results they liked. So it was, I don't know what's actually, once they go into Chinese hands, you've got this sort of information gap, right? You never really know what they've got. No JORC, they've got no NI 43 101, no standardised reporting. So we don't really know what they produce and what they do. So
like when you evaluate projects, are you kind of just clean cut oxide only? Like, are you
look,
like
it doesn't really matter what it is. We just understand, and it's something I've been trying to convince to assign almost or very low bombwork indexes to the oxide, because oxide bombwork indexes are always exaggerated in projects. Like, and it's a function of how you do your physical testing, like how you recover the core for the test first, because oxide core recoveries are difficult. Like, you rarely get a good core recovery from oxide, and then you need a piece that's big enough to put on a compression tester to get that thing. Now, it needs to be competent enough. You can't put a piece of mud underneath there, because it'll give you a zero value on the compression. It won't actually register. Zeros throw models, so that they find the most competent bit, and it's generally dry when they do it. So, and oxide's generally competent when it's dry, but sometimes melts when it's wet, So you get a number that's sort of 8 to 15, I guess, with oxide, but it's never really that. When you actually put it through a mill, it's always lower on your. So, you can always get more tonnes through an oxide circuit than what you think you can, and it never draws as much power as you think it's going to draw. So you always have savings there. But what we're looking for is just things that make money, and it doesn't need to be. It can be fresh rock from the start, but it's having that depth of oxidation really it's very desirable for miners, and true miners will tell you that as well. I mean, there's a lot of mines that started up without any oxide, and they've done it well, but it's sometimes oxide can be sort of deleterious, especially in Indonesia when it's super wet. It's hard to get through your crushers and stuff. But you generally design your circuits to handle oxide and fresh rock, and run at a certain set point on the toughest blend you're actually going to experience, and then everything under that is. And we've got some very good mill comminution guys what we use over and over again. I think they're divisional Lycopodium, and we've been using them for a long time, and they do very good work in sort of checking mill designs for us, and they're always conservative as well. So we always get upside on the mills. So it's I'd advise anybody designing a milling circuit procuring a milling circuit to get them checked and make sure the mill you've got it's got a bit more in it, because that little bit more gets you by when everything else is, everything else falls apart. If the grade doesn't come in, if the, being able to push tonnes through the mill, it always helps. It won't cover up all problems, but it certainly helps.
I'm sure you've got bankers showing you projects from all over. Is your jurisdictional appetite beyond West Africa right now?
Certainly the whole of Africa will go to, and, never say never anywhere. Like if the right deposit comes up and we think we can execute it, like we'll certainly do it. Like from a development point of view, it's where we add the most value, I guess, is West Africa. But there's certainly, I wouldn't say no to anywhere in West Africa. It's all buildable. Anywhere in Africa, sorry. It's all constructible. It's just a different challenge for the guys, different set of contractors, different. But coming from where we're doing, so you need 3 contractors on your job. The rest of them are basically side contractors. So it's we'll go anywhere if we have to. But it's our team's still young, but they're getting older. There's no doubt. Like we've got less appetite for super hard jurisdictions, I guess, especially after Russia, who broke a few of our guys. It wouldn't go back there, but anyway.
You're at pains to point out that the bid when you were at Tietto was opportunistic and it undervalued the business. So we've gone through a couple of the points, but what are the other things you just have ingrained in your mind about making sure no one has the opportunity to come in when there might be a dip in your share price?
Well, I guess you need to have a pipeline asset. If you've got that, you can show investors that there's money at the end of that development as well. So, we're pretty much looking for pipeline assets at the moment. Even before this transaction's completely finished, we're already cognizant of the fact that we need something. It's not even about, completely defending yourself. It's making sure if you do sell, you get a very fair price for it. So, and you get a price that, your shareholders are happy with, I guess. And so, yeah, having that pipeline asset is probably the number one thing, I guess, and just making sure you don't dip. I guess resource model reconciliations is something that's always going to smash your share price, and so is poor startups, I guess, so into the mill. So you got to make sure that happens. I guess Northern Star at the moment are getting punished because of a crusher in their pit, but it's, they've been nothing but fantastic for 10 years straight, or more or less that long now. And then one little hiccup, I guess, and they're getting punished. So, but you just got to make sure you do everything you can to make sure you maximise production month on month, year on year, and the rest looks after itself. But
right now, there's a lot of concentration in Guinea, like your key asset, key development asset, both Guinea.
And I think we'll look to try and alleviate some of that jurisdictional risk by having our next development asset outside of Guinea. There's no doubt. So it's but for me, I definitely like to see a project in Sierra Leone or Liberia. There's some, probably it's the developing regions that are right next door, and certainly they're very welcoming investment right now.
Yeah.
There's
not many gold mines in Sierra Leone.
There's one being developed at the moment.
Is that a Chinese one? Or?
No, it's half Nigerian, half Indian, I think, at the moment. So it's called Bowman FG Gold.
Yeah. I have heard of that.
There's one development, there's one study out Liberia called Dugby, I believe it's pronounced.
Yeah.
And there's an operating gold in New Liberty, and all of them private, so you don't hear much about them. And then you've got, so look, there's gold there, and it's Archean, so it's not the same sort of structures, but it's there's certainly gold there, and it's big, thick depth of oxidation as well. So a lot of laterite, but high rainfall, so it makes it tricky. Then obviously Côte d'Ivoire is still an amazing jurisdiction, despite royalty increases or something that are potential right now. It's still a good jurisdiction. Great infrastructure, amazing highways, amazing city, amazing everything. Power grid is second to none. So Ghana's a bit difficult at the moment. Obviously, Burkina and Mali are challenging. There's no doubt. And then you've got other jurisdictions down Gabon. Like it's still sort of technically Western Africa, I guess. And then Namibia seems to be a very big possibility in terms of finding more assets now as well. So. Yeah, we're pretty flexible on that sort of western side of Africa is where we like. I mean, obviously Tanzania is coming back. You've got Perseus developing there after sort of, I think it'd been 20 years since Buzwagi was developed. That was the last sort of major development in East Africa. So, and then you've got jurisdictions like Ethiopia, that are starting to become alive. I believe there's one under construction there now and a second one in the works. So, you never know where gold's going to be found. Like, you've got to admire the pioneering geologists that get out there and, collect soil samples and drill holes in the middle of nowhere with no guarantees of success, So it's a tough game.
Can I ask you about some of the undeveloped projects that are out in the landscape right now? You don't have to be super forthcoming if it's compromising to your BD plans, but I think with an ASX bias, what do you think of Taraco?
Oh, I think it's definitely got a lot of potential. I mean, I'm waiting for the study to come out. I know Justin well, and it's it's a real project. It's definitely going to get built. So,
We Are Gold.
Look, that's a great project too. I think it's got a lot of potential. It's they're the two probably
premier ones,
most advanced feasibility level assets at the moment. So it's I've certainly got my eye on both of them. But
but
valuations are high, I guess. But so is the gold price. So
yeah,
you never know. These things take time. Nothing happens overnight. You don't know when the inflection point might be, and you might get a decent crack at one of these assets. You've almost got to be in the right place for a long enough time for it to be the right time, especially for these things. So it's Look, but I think they're both good assets, and they'll definitely end up being mines. So it's a question of when. Justin just seems to keep adding 500,000 ounce every time he drills a hole. So I don't know. I don't know how big that thing's going to get. In the end. So it's And I wonder, because apparently studies coming out mid next quarter. So it's a question of how much bigger is it going to keep getting after the study. But I think after a while, people want you to start having development plans, and that's where Justin will be now. I think his eye is to develop it right now. So we'll see. But
so maybe further down the chain, but something like Many Peaks and their neighbour there, Awali.
Yeah, look, definitely got my eye on all these. They're all very good projects. So Awali's sort of it's got Newmont and to a lesser extent Fortuna's already stamp on it. I don't think it'll be a Newmont mine. So Newmont will eventually surrender those assets, I guess, and definitely a good friend of Chubby's as well. And that's they'll be mines eventually, and I think Many Peaks will almost definitely be a mine. It's certainly got the right geology. It's just the scale of it that'll matter, and how much they can find to get into a study. But it's not going to be. You've got to sort of almost develop things of scale now. There's not many really 50,000 ounce producers out there these days. Single asset at least anyway. It's got to be bigger than that to fund a West African operation. We'll see, but they're all good assets.
Orem, we saw Perseus take a stake.
I'll stay in the mum on that. You've done anything nice to say. It's similar to Orebody to Tietto, I guess.
Yeah.
They'll have the same problem. So it's sort of chasing artisanal miners. If you chase that sort of high quartz veiny, nuggety sort of gold, when you sort of that's what the artisanals chase, and it's why they dig deep and narrow on those sort of pits, and doesn't turn into big mining blocks that you need for open pit mining. So it seems somewhat fractured. I guess it's all over the place. So,
but you can make money from it, as was the case with
Tietto.
Look,
you can definitely make money from it,
but it's a rocky path.
Yeah, I guess it's making sure that it's drilled out, and it's got that infill drilling to give you some sort of surety over the asset, I guess, and then Look, you never to say never. I mean, that's obviously Perseus saw something in it, but it's it was an unusual step. I thought that that'd be an asset they were super used to. It's certainly not. It's not a Bankan quality asset, but it's look. See where they got it relatively cheap too. So if you look at it purely from a resource ounce base to a value proposition, it's pretty cheap.
Oh yeah, on the maybe different tact a little bit, but did I see what became of Hummingbird? The guy that's now running that is Sebastian, the ex-Endeavour guy.
Yeah, I've heard that too.
Yeah.
So Sebastian's involved.
Aren't there some synergies with that and some of the
Well,
stuff is-
Carusa's literally, so there's 3 mines in sort of
Yeah.
the area, and Carusa's one of them. So that's one of their mines. It was a pretty tough startup for them. They didn't do anything right. Like it's, and this is Hummingbird. Obviously, they're all gone now. They sort of went through about, 8 project directors and 5 general managers in the short time that it operated. And then, it sort of, I think at this gold price, it's settled down. They're making money. It's owned by Nasser Idrissa. So he's the Chorus Bank guy, right? So Mansa Gold or Mansa Resources is his vehicle. And they've just bought out the other 49% of Pasifino to buy that Dubi asset in Liberia. Plus, they've got that Yanafalila in Mali, but not really sure where that's going. Again, these companies are private. They become pretty opaque. It's hard to see inside there, and know what's actually happening. Are they making money? Are they losing money? We don't know. Like there's no quarterly account statements that get put out. So we're certainly haven't been in their books. So we'll see what happens. But it's but they're it's right there. I guess it's a tri-mine area. All within sort of a 25k radius, and Bruce is one of those mines. It's never going to be a Kinero, let alone a Bankan, but it's still a nice little deposit, I guess. And they're about to get hopefully access to another mining permit. They need to sustain their operations. But
there was a huge fuss made last year over all the tenements and just mining in general in Guinea for exploration type projects. Predictive were dragged into this too. Was that?
Yeah, they were. I guess a lot of it comes down to, maybe not the way it was executed, but I admire the spirit in which Guinea actually did it, because a lot of West Africa's assets are locked up by guys that have no intention of developing them. They just sit on the permit and hope someone funds the development and keep a royalty or a free carry interest, which is, I think it's against the spirit of what we're trying to do in terms of you got to find it, explore it, mine it, develop it, and these guys have got no. So I like the fact that Guinea is actually cleaning up their cadastry, but saying that it didn't work very well for Predictive, which is, obviously I've got an interest in that too. So it's they lost the Argo one, which hopefully comes back, and a few of their more development, sort of pretty decent tenements around Guinea. But again, maybe as a company, we probably not looking to actively develop that much in Guinea going forward. We'd like to probably stay, to diversify that jurisdictional risk somewhat. So it's we'll see. But it's look, I think a lot of countries could use a clean up of their cadastry. And I don't fault the Guinean government for doing it. It is a bit frustrating there at the moment. We've been waiting on mining permits for 18 months. But we know it's eventually going to be issued. It's just a question of when they actually issue it, and it's incredibly frustrating wait, especially when it's at a presidential approval stage and every other approval process thing, and it's just sort of stalled there, as we are with Bankan and Monsoon now. So we've got 2 permits there, but again, we can only do what we can do. There's some things outside your control, yes, and we've just got to try and do what we can do well. Right.
This is the period of the gold bull market where you see the reaction functions of a lot of various African countries, governments kind of upping royalties, changing the tax regimes, et cetera, to make it a bit more onerous on these super profit periods for the miners.
Yeah, well, it's not unusual. I mean, the Australian government did that with the resource super profit tax as well.
It's not
so when they see your margins
global phenomenon
are becoming massive, it's their literal is to take a bigger bite of the cherry, right? So it's it's unfortunate, and hopefully it doesn't spread or get too out of control. But at the moment, I think with current gold prices, as long as it's sort of tiered in a way that these things only come in over a certain gold price, it's see it as another business expense really. But it's obviously we don't like it. Nobody likes having more of their gold taken away from them, especially when they're already contributing so much. And I think people miss the fact that probably half the total profit from a mine is shared with the country, or more in terms of taxes and revenues. So we try to be good corporate citizens as much as we can, especially, engaging our local community, employing locals, bringing up local businesses, doing all these things we can do for the community. And like, I think that gets lost and people sort of think we're stealing their resources, which is, I think they get a lot bigger share out of it than the Australian government does out of it. That's for certain. Like the very low royalty rates here and relatively low corporate tax rates and no free carried interest, right?
If you were to, if there was just one project in Africa, West Africa, wherever that you've come across and you just think, I wish I could have that mine, like what is the best?
Look, it would have been for cola, but now it's definitely Bankan.
Yeah, of course. It can't be your own one.
I think I lost track at the start of the story, but in that WhatsApp group at the start of that, the Chinese thing, it was like, after we do this, we go for Bankan. It was always in our, in our playbook to go after that, and you can literally see it from our mines as well. So it's like it's very close, and
synergies are real.
Synergies are real, and it just makes a big hub, of gold miners, and I think quality long life assets, and that's what we want, going forward. It's one thing to have the whole thing's both our ore bodies are 2-to-1 strip, sort of, in the open pit, and Bankan have got a relatively 3.5 gram, but huge underground, right? It's going to be huge stopes, and it's going to be a big thing. Whereas, and then we've got potential underneath some of our pits for future underground as well. So it's, things are going to get bigger in Kinero, and, hopefully they'll sort of come closer to the same size assets in what we develop. So it's, we were very cash strapped at the beginning of last year, and we really didn't have much money for drilling, and every drill hole we put in, converted to resources or reserves. We really focused it, but we did with the cheapest holes. We stayed in oxide. We drilled cheap. Whereas this year we've got we've got budget to really explore. So it's going to be fantastic. So
it's a really interesting growth vehicle. If you think the best case scenario 10 years from now, what do you think Robex looks like?
Well, it won't be Robex. It'll be PDI Gold, I think. Assuming this happens. The name will be PDI Gold. But look, best case scenario is, we're in Endeavour size, what Endeavour is today, like 1 million plus ounces, maybe 1.5. You never really know what's being found until it's found, right? And how quick did Predictive come up? Predictive was nothing when we were building Tietto, and now, it's one of the premium deposits, and
so long it was
there'll be a few more of them out there.
The deposit got better and better, but the share price was flat. But the market cap did grow. They were just raising money.
Look, it's going to get better now, and it doesn't. We're certainly not looking to dilute anymore, and certainly not going to be raising money. And it's the cash accretion from both those two mines operating is going to be massive. So we've got that to look forward to. We've got great cash accretion just during this period as well. So adding money, so it's all the time. So we just can't wait to start building it really.
And do you think anything pops out of some of the incumbents? Do you think there are attractive development projects and someone's looking to get out of Africa? Do you think there's those are tangible opportunities for someone like you, or do you just think the Chinese can overpay for that sort of stuff?
You never know, right? And sometimes there'll be geopolitical factors that mean the Chinese aren't interested, or but it's we'll see. I mean, obviously, people have made a lot of money mining ex-Newmont assets, ex-Barrick asset, things like that. So there's all real potential there, right? So it's to my mind, I think we add the most value as developers. But if the right asset comes along, I think we've got a really great operations team as well, and we can add value there. But it's, I guess, taking a sort of junior miner mindset to a senior operation and just trying to cut it down to make it work for you is something that can add a lot of value as well. So it's but yeah, look, never say never. There's some. I mean, obviously Lulu's fantastic, Fekola's fantastic. Still, they've still got great deposits left. They're long life mines. Some of the stuff in Burkina's, Hundi, Kiaka, Sembrado are still fantastic assets. So there's a lot of orphaned assets out there in development stage, I guess, that are not orphaned, I guess, but that might be looking to be made, put up on the sales block in time to come. So whether the Chinese buy all of them, I don't know. They seem to have unlimited deep pockets and just massive amounts of cash, so it's very hard to compete. But saying that, I think everyone wants to see their their project developed well and run well, and have some sort of continuity over their staff. Chinese don't seem to have those same sort of values ingrained in them, especially at looking after the current staff and making sure things move smoothly. So there's some value there as well. So we'll see. I mean, you can never really tell what the Chinese are going to do. They might decide they don't want to mine gold for a while and go to a different country, I don't know, or different jurisdiction altogether and start attacking South American gold miners. Look, they haven't had that much success yet, have they? I mean, where have they been super successful with their operations?
Such a different lens you have to me, because as an operator, like, it's an interesting view, because I see Zijin's like TSR, compare it to any of their peers, and it's just like blows the equivalent majors out of the park.
Just buying operating assets. It's a different way to, I think, the way you might look at it, but
yeah, I guess so. I mean, they've been very fortunate to buy them at the bottom of a growth cycle, I guess. But I haven't really looked at. I mean, can you really trust all the information they put out there as well? Like, it's not as transparent. They're almost private, you know what I mean? It's not as transparent as the Western miners have to be, So we'll see. I'm not overly concerned with them at the moment, because I just don't think they can do it as well as the West can at the moment. But give it 10 years, things will be very different, I'm guessing. So yeah, hopefully I can avoid working directly for the Chinese in my career, but you never know. It's
Matt, this has been awesome, super insightful for all of us. So appreciate you coming on and sharing the journey and the future.
No worries. Thanks for having me, guys.
When the deal's done, go take an oxide holiday for yourself, mate.
Nice to have a holiday. All right.
How good was that, mate? Learned heaps in there. Massive thank you to Sandvik Ground Support, Metals Hub, Focus, the platform by Market Tech, and Intralinks. Hooroo!
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.